Okay, well, I'm really excited to have Sandy Shindleman join me on this call. Sandy is the president and CEO of Shindico, which is an asset management company and consulting firm based out of Winnipeg. In addition to his role in that position, he's also an active developer and an investor. So we're going to jump into all those things. Thank you, Sandy, for jumping on this call.
Thank you for having me, Chad.
So first thing that I always like to get guests' opinion on is just what this past year has been like for you. You're based out of Winnipeg, and we chatted just a couple minutes ago that you've been in Winnipeg physically for the last year straight. So what have you seen over this past year?
Well, as I have not traveled outside of Winnipeg for 15 months, as we speak today. And what I've noticed pandemic-wise is our team has been working long hours. They didn't lick their wounds for very long. And I seem to think that the general industry isn't working as hard. So they're making it a self-fulfilling prophecy. So we're doing deals. We're doing retail deals. We're doing investment deals, lots of them. Overriding is the low interest rates and the demand and the incredible construction inflation, which is making existing assets pretty desirable.
Yeah, I would echo your comments. When this first started last March, so 14 months ago now, 13, 14 months ago, it seemed pretty dire at the beginning. Like everyone was a little unsure about what was actually going to happen. But once that first shock to the system went through, I agree with you. I saw a pretty big influx of people wanting to do stuff. There were pockets that were pretty slow, but to your point, investments have actually been really robust. We've seen a pretty big pickup, especially in 2021 so far. So it's interesting to see how quickly that roller coaster can go from the valley all the way to the peak again.
Yeah, I think the pandemic certainly accelerated the inevitable. You know, the internet, purchasing on the internet, staying out of the office. We adapted in a day. We're all on the cloud. We had everyone set up at home. They came here March the 16th and picked up whatever they needed, monitors or keyboards or whatever. And they were able to transition very quickly. And so that was good. However, having people out of the office, now we're just in the office, everybody now. We went for a few months of 50%. You either had your week on or your week off. And if you didn't feel comfortable, you could stay home. And, you know, no lunchroom, no, you know, after social distance and all of that stuff, wear masks. But you lose the mentoring. And I hope this is over soon, certainly within a year, because there's a whole cadre of people that don't get the same kind of mentoring in any of the disciplines that we have. Property management, asset managers, even accountants. The learning steps are slower. Because people are generally reluctant. You're a new person in a company. You're told that you can call your supervisor 50 times a day and here's their number and all you have to do is use their extension. But people don't. They try and figure it out for an hour first. So that, as far as I can see, is the only thing. Industrial, where it's been slow on some of the lease up, we've had deals that were just about to get done. All we were waiting for was someone to fly in from Montreal or Toronto to look at the property, and they haven't been here yet. So, but mind you, our business in Toronto, Montreal, and Ottawa, where we're partnered with a multi-family high-rise rental builder, has been very robust. Land that we thought we were going to buy for X, we paid 1.7 times X.
Wow.
So there's lots of people chasing it, lots of pension funds chasing things, and we're doing deals, grand openings of grocery stores, strips. We're doing a lot of renovations, and I recall one transaction that we bought. It was a 50,000 foot down beaten shopping strip in a good location. We tied it up in February before the pandemic. Now, during the ensuing months, there's a few tenants that decided to move out or go broke, and we worked with the owner and tried to get a reduction in price. There's no such luck. Now, he delayed the closing, and I think we closed in August. And we're going to spend about $3 million renovating and repositioning it. It's still a good asset, but I don't know. We didn't get to take advantage of the pandemic.
Yeah,
I mean, Trudeau thinks it's good for business, but I don't think it is. It hasn't helped us.
Yeah, I haven't seen many deals come out of this either over this past year. As much as people might expect there have to have been deals, there really wasn't. And I know you guys are quite active in development as well. I read that you guys have developed over 8 million square feet with
Yes.
more in the pipe. So what's the current landscape look like on developing? Because you mentioned construction costs are going up. I think everybody's aware that inflation across the board with all types of construction costs. So has that changed your guys' model on how you're looking at doing ground up development right now?
It has. If there is a need, there's still a need. And the low interest rates and the pent up demand to do things, sometimes we reach for lower returns, or land goes in at less market, it's legacy land. We've been adding high quality multi-res to our assets just across the street from our office, in a retail development where I started acquiring the land 30 years ago in different pieces and assemblies. And we always anticipated we'd have the usual suspects there, a Staples, a Michaels, etc., to go along with our Walmart. And it's going to be 250 apartments on the pads.
Wow.
And concrete apartments, because we're getting a lot of wood frame. Everybody's a developer today. Availability of financing, and if you got a pickup truck and a T-square, you're building 50 units. So, and everybody can get partners. All they need to do is look after their health and go to the dentist or go to the doctor, and they'll find some investors. And so we're competing with that. So there's going to be a little vacancy, and the average vacancies don't really tell the story. The new product is going to have a bigger vacancy, but it'll still work. We're adding daytime population to our centers, and it's working. We have an industrial park, 23-acre industrial park. We built the first building, small, 40,000 feet, I think. But we built 28 clear with a lot of doors and a lot of truck dock area and compounding. There's a couple of deals to fill it, and then we will go on spec and maybe do 80 or 100,000 feet the next time.
I was talking with Matt Johnson from Kingset recently, and he mentioned that their strategy right now is to really look at buildings that can be backfilled with various types of tenants. So instead of building something just for a warehousing tenant or just for a manufacturing tenant, they're really trying to either build or buy something that can be multi-purpose. So are you guys trying to take the same approach with 28-foot ceilings? Are you trying to cater towards the logistics warehousing and still have the ability to offer manufacturing?
We have the ability to go down, I think, in that building to 3,600 square feet.
Oh, wow.
And I think it's 140 deep and or 120 deep. I'm not exactly sure what that one is, but all of ours will be readily subdividable. There'll be all kinds of doors. We'll err by putting too many, and it all can be multi-tenanted. A big portfolio of industrial sold not long ago, quad reel portfolio of old, a little bit lower ceiling, but in good shape, with a multitude of tenants, and that's sold, I don't know who, reportedly to a REIT.
Are you seeing more demand for industrial and multifamily, or are you seeing an increase in all asset classes right now?
Well, I would say all asset classes. Obviously, multifamily and industrial, number 1 and 2, or Quinella, you know, which way you go. But it seems like if you work hard and you're able to do local leasing, whether it's cannabis stores or QSRs, whatever it is, you can do deals. And, you know, I've signed 3 or 4 counter offers this morning before I came on the call with you.
Well, so going back to the construction cost, because that's an ingredient in every product class, whether retail, office, industrial. I'm hearing from a lot of guys right now that it's tough to even lock in pricing for a month out, whereas some guys would be able to lock in construction price for the whole season. If they gave you a quote in March or April, they'd hold that price all the way until October. But now I'm hearing some guys aren't even agreeing to lock in prices for a month.
I think I'm not a sub-trade, so I'll take my shot at the sub-trade. We're hearing a lot of BS. For repairs to an HVAC unit, a client of ours had a friend tell him he could only hold the price for 4 days.
Oh.
And I said, well, how much is the price? What are you repairing? It's an old donut shop. It's $8,000 worth of repairs to an HVAC unit. I said, hold the phone, don't do it. The tenant we're representing will take a TI and put their own HVAC on, but it's getting out of control, really. Granted, I had to make a deal to purchase appliances because they wouldn't guarantee, although they're in the country, they wouldn't guarantee they wouldn't give them to another client and reorder for us. So we paid for them.
So you've been doing this for a long time. Have you seen this before, like this craziness?
Never. In all the inflation and all the deflation, people closing up and distribution leaving Winnipeg, which, you know, 30 years ago, there was never the fact that somebody wouldn't hold the price of something. Some of it is real, but I'm going to say 51% of it is not. So what are you going to do?
Yeah.
You know, if, you know, the 3 trades are saying the same thing, unless you're prepared to do it yourself, and there will be more self-performing on, I think, especially on multi-res. There will be self-performing.
Where do you see an inflection point on this? Is this going to be a problem for 2021, or is it just supply chain issues need to work through the bottlenecks and sort itself out?
Well, I'm thinking it's going to be at least a year out, so that takes us into 2022. But this is a relationship business in a place like Winnipeg. There's not a lot of transients here. Everybody's here who's been here. Those that treated their clients well will be remembered, and those who took advantage of the situation will be remembered too.
Yeah, that's a very good point on it. So with this inflationary environment, that also means that in the investment world is changing, because we're seeing asset value inflation as well. So when you're either looking for yourself as an investor or you're advising an investor, what are you saying to someone that's being forced to potentially get into a multiple offer situation or even having to pay above asking price?
We're advising them what it would cost to replace the asset. we have for at least the last half a dozen years been quite expert on one-off sales. You know, you couldn't make a business of selling closed bank branches because you wouldn't make a living doing one every 18 months. But there's always buyers for them, and buyers reach way more than tenants do. And really what you have to say is, in this infill site, here's the value of land, and here's the value of a new building with those kind of improvements. You know, and it's likely to be $500 a foot land and building. So $400 a foot for something that you don't have to wait for. Well, it's an unheard of price. Everyone who's purchased those seems happy. You know,
Yeah,
they financed them at 3%, and they're happy.
do you have any predictions on where interest rates are going? Is it tied close to inflation? Are we going to see growth in inflation and interest rates this year?
Whether it's this year or not, you have to feel that there's going to be an increase in either spreads over bonds or the bonds themselves. They're chomping at the bit to raise them. I think that they will be higher, and that's just helping the feeding frenzy of housing and small investments anyway.
I remember I attended a session that you put on about 15 years ago where you gave a presentation on supply chain. And it really fascinated me because you went into great depths about TUs and transportation coming from overseas. And that actually really sparked an interest in me at the time to learn more about industrial real estate. So I'm assuming you're still following a lot of those trends quite closely.
Yes, you know, the dry index, EUs, really the last mile is what we tend to focus on, you know, at the local level, but it's not the last mile, it's the whole number of miles. At least it was, and maybe it still will be. You have to know the cost of bringing a skid in from China. And whether it's the Suez Canal or through the port of Long Beach, or you know, you have to look at the rail system, and you have to know what that is. I know we represent Dollarama in this market, and I learned a lot from Larry Rossi, the founder of Dollarama, who was a is a brilliant merchant. And you know, a backfill from something into Winnipeg from his Vancouver warehouse, you know, it was $80 a skid when we started this. Wow. Now that seems awfully cheap to bring something from Vancouver, when you know, you couldn't walk there. You'd burn through more than $80 worth of shoes. So it does matter, and that's why industrial locations near transportation, the ease of truck movement and getting on the highways. Winnipeg is a trucking center, and we have both railways here. So it's important. It's certainly important. Not only the last mile.
Were you watching the Suez Canal blockage and the implications on that?
Yes. Luckily, they got it solved in about a week. But when it wasn't solved in about 3 days, now it was anybody's guess.
It was funny how quickly the Suez Canal rose to prominence when people don't realize that there are a few chokeholds in global trade, and when one of them goes offline, it can have major implications. And in this world of Twitter that we're living in, that became high news very quickly.
Well, the train system in Canada, the bridge system, the infrastructure is better as a whole than it is in the United States. They've got a lot of old infrastructure, old bridges, weight constrained. the number of cars you can have in a train is constrained. So that's why the port of Prince Rupert and Vancouver, with our rail system, they're 2 days into Chicago, matters. The only place that doesn't have good rail and good access for the goods that come from overseas actually is the Pacific Northwest. And you'd think that would be the better kind of it. But the US rail system and transportation system doesn't go to there as easily as it goes to the old markets.
So what are you watching then going forward? Like you're trying to keep on top of trends and things that are impacting the market. What are you watching closely over the next several months in 2021 here?
Costs and taxes. As we speak today, there's a federal budget on the 19th of April. I don't know what that is going to look like, but obviously I'm afraid of what it might look like. And so will it drive investment dollars elsewhere? Luckily, Joe Biden is, a drunken sailor when it comes to taxes too, but we're going to have to watch it because people may stay on the sidelines a little more. That's a trend. And the demand trend. As cities, especially left-leaning cities like ours, administratively constrain supply, people can't live here if there's no place for them to live. If you put developers through so many hoops, they all want infill, but not in their backyard. They all want mixed use. They all want multifamily. And it doesn't take government money or government funds to do it. If they let the market dictate it, let everybody who wants to build, then there'll be vacancy, then there'll be opportunities for people to recycle and upgrade their housing and be in a place where then they're using the retail, they're going to jobs that are in that market, and you have a lower carbon footprint. Not everyone's bottleneck going downtown, at least not at the same time. And so that's what we see. We're watching carefully in all markets. As people rush to get out of retail, we're certainly looking at it to get into it. I spoke to a partner in Arizona, and he told me the prices and the cap rates of industrial and multifamily. And then he said, but there's guys buying retail at $80 to $120 a foot. So they're getting 7 caps and they're getting the vacancy for free. So all you need to do is lease the vacancy for net effective 0 to get the operating costs, and you've raised your 7 cap to a 9. And I think you can underwrite that very well.
Oh, yeah, absolutely. So where do you get your information from? Like I'm sure you're watching the news and trying to catch as much as you can, but where do you get all your information from so you can make intelligent decisions?
Well, the network that we've set up over the last 40 years, certainly through CCIM, SIOR information, people It's not really just an organization. I know you. I could phone you in Edmonton, and if you tell me something, I know it's true. It's not true because you're a member of any organization or any brokerage network, but having your network and maintaining your network and doing the things like you're doing to, be the local expert and listening carefully and critically to all the information. I read a lot, too much. I like a good long weekend or a Christmas vacation so I can get the unsubscribe, 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 because it can be too much. You know, this morning I got up early for me, 4:20, and I turned on my iPad, and you know, the 78 unread. That's a little pressure on somebody in case there's something important there. Luckily, none of it's important, but still, there might be some good jokes that I need to see. So you can't, the information flow, the news consolidators, you know, Twitter, LinkedIn, you can get a lot of information, but really you can only afford to read the headlines.
I really like your point there, because you're right. I could read 5 articles about Winnipeg's market, or I could call you and I would take your opinion over those 5 articles in a heartbeat, and I'll cut through a lot of that noise just by hearing it directly from you. So that's a really good point about just having a strong network that you're cultivating and nurturing over time.
Yes, you know, the thing about the 5 articles, the 5 people quoted or 10 people quoted could have told the writer exactly the truth and the right thing, but somehow in the translation, it says something completely opposite. You have to be so careful with media, because they have an opinion and they'll make the news fit it, especially our media in Winnipeg.
I would say globally. I'd say there's a lot of that truth spinning and news doctoring that happens across the board.
Yeah, and it's disappointing that you can't rely on it. But it causes you to think,
Yep.
and hopefully you think about who you know in that market, if you need the information at all, and you go for it from that perspective.
I do want to expand on the point that you brought up about CCIM and SIOR, because I think that there's a lot of people that have either considered it or they've been on the fence with it. And I know you credit a lot of your success with the CCIM designation you've had for many years. So I want to get your thoughts and comments. And I know you're a strong advocate of it, so you'll definitely be in favor. But I think it's just a message to anybody considering either one of those designations. What do you see the value of that?
Well, I'll start with CCIM, since I have the longest longevity with it. I was designated in 1982, the first Canadian group that got it in Canada. I'd had my classes, some of them in the US, some of them in Canada. And I got to network with people that I probably wouldn't know, and certainly didn't know. And when you spend a week with somebody and breakfast, lunch, and dinner, you do get to know them. And that was a benefit. When we got to the CCIM, the old 100 course, which they don't offer anymore, it's not hard enough. It's not academically taxing enough. It's probably the best course in the program of how to set up and how to set your business up. And it really resonated with me. I got home and I did all the things that they talked about. There is good information there. They're changing it. I'm going on I'm the committee chair for 102, the development course. And, you know, we're in meetings this afternoon on that, the curriculum changing and what's new. And by participating in it, you have to be on top of it. You know, you can't just put it away and go on with it, that it's a check mark. If you participate, you get a good idea. And, you know, how do you read the newspaper? You know, I read the local Pravda newspaper, and I took about 6 photographs of different things, spurned ideas. We should find out about this. We should find out about that. Could this be for sale? And that's what's fun. The business development is what's fun. One day I'd like to retire. And when I do, I'll keep my license and I'll keep this. And I like phoning people. I like prospecting. I like developing business. And I especially like the strong objections and the people who don't want to hear from you. Because
So
that's
nearly
how you're going to have fun. What have you got to lose by somebody telling you to go to hell?
yeah, what a boring day that would be without that.
Yeah, it's
So
fun.
nearly 40 years that you've had your CCM designation, and you've been active with the Institute along the way. I'm assuming you've made then relationships all over the world with other CCMs.
I have. I mean, I've taught. We were the first into Moscow when the wall was coming down. The Russian White House was still on fire. I've taught in Prague and Paris and London, in China, places that I probably wouldn't go back to. I think Brazil, the United States, of course, and Canada. And it's good for connections. It's good for really having the time away to think about your business.
Mhm.
And so I cherish those times. I don't travel at all for 15 months, and I'm going to travel a lot less in teaching, etc. But all of our conferences, be it Corfac or RBN, they all figured out webinars and getting together virtually, and it's pretty good.
Mhm.
You can sit here and listen to a webinar and answer 50 emails on your phone at the same time. It's pretty good.
It is, yeah. I'm probably doing 2 webinars a week right now between CCM and SIOR and NAOP. Like there's a
Yeah,
lot of opportunity to do it, and you can do it from the comfort of your couch if you want. And like you said, to multitask is a huge benefit as well. I
yeah.
got my CCM designation in 2007, so I've coming on about 14 years now. And I say to everybody that's considering it, just dip your toe in. Just take the CCM 101 course, because especially if you don't have a background in finance, it's one of those things where you don't know what you don't know. So to get into learning about NPV and IRR and time value of money, even if you don't necessarily want to pursue the designation, just dipping your toe in will expose you to a world that you didn't even know existed before.
Well, you can be a lot more value add to prospects and clients
Mhm.
by knowing this, instead of saying, it's not my job, knowing what's deductible, knowing what CCA class things fall in. Those are things that a real estate professional, a broker never needed to know. Go to your accountant, see your lawyer. Well, when it comes time to real estate brokerage and structuring deals, you need to know about 8 pages of the tax code. That's double from the 4 pages we used to have to know. So it can be 1,000 or 2,000 pages. I don't know how much it is, but what class it is, how to set up the investments, what is deductible, what can you accelerate capital cost allowance on. You can become an expert in about an hour
Mhm.
if you know what to look for.
And then that really does become a value add proposition that you offer to clients. And you contrast one agent that knows that and one that doesn't. There's clearly an upside to the one that does know it in terms of offering something to the client.
And it's not difficult, or I wouldn't be able to do it. It's not.
And then SIOR, you've had your SIOR for a long time as well. What's been your
Yes.
experience with that?
Um, it's very good. That's more networking, I would say, than CCIM. CCIM is more education and practices, which you should have before you go out and network when you don't know anything. They're more orientated to, they started out after the war because they were the brokers in all the various communities that found industrial space for the war effort. That's how it started, the SIR. And it evolved over time. It is a good group. Those are active in it are great people I found. And it's a way of filtering people. I mean, you don't know a person who's in another market, Toledo or Memphis, But if they've passed an exam for somebody else, be it CCIM, SOR, whoever, it does say something about them. Now, you could still find an idiot. They're on every corner, but I think you could ferret them out a little easier.
Yeah, I've noticed that as well with the network. Is I break it down exactly the same way. CCM is about the education, and SIOR is about the network. So I share your thoughts with that perfectly. And I've noticed that of all the other SIORs that I've talked to all over the world, you're right, they have got past that benchmark to have a great level of competency. So that's been a good tool for me as well. So any final comments? I don't want to go over the time here because I'm respectful of your time.
We're active in personal storage, but this is a case where construction costs are outstripping the risk tolerance. We like that business.
Yeah, yeah. You started a Storageville a number of years ago.
That's right.
Yeah.
I had wanted to be in the storage business, and this is through CCIM. I was teaching with two gentlemen in Toronto. One was from Montgomery, Alabama, and one was from Richmond, Virginia. And all of their examples centered on personal storage because they were in that industry. And I really wanted to be in that industry, but I couldn't do everything. And it took me about 10 years to finally do it and find a partner that I trust and I'm happy to have to this day, and build out the storage that we built out.
And then, like you said, inflation's increasing the risk with that as well.
Yeah, but even back in the day, the first one we did about 15 years ago, plus or minus, at most 15 years ago. And we wanted to stabilize it. It was our first asset. We didn't know anything about the business. And it is a complicated business. It trades as real estate. It acts like real estate, but it's a business. I mean, the gate breaks at night. It is a business that you have to look after. But by the time we got our second location, and I would say it was about 7 years to from the start of the other first location, it cost about double per square foot to build.
Wow.
And that's without this construction inflation that we're now experiencing.
So the third store could cost you even that much more.
Oh, yeah. The third store, we expect will be double again. So, you have to go multi-level today. You can't really build a single story unit anymore, because if you can build a single story unit, your location is shitty. If you can afford, 5-7 acres to build a facility, you need to figure out how to get it on 1 acre.
And we're seeing that a lot too in Edmonton. There's a lot of multi-story self-storage going up now.
Yes. We haven't had them here yet because enough single story got built by various people that our occupancy rate and rack rate haven't driven that yet. And in the States, it's much different. We don't have a lot of shit. I have a story on storage. My sister-in-law came to stay with us for a few days. She lives in Denver. A Saturday morning, I go out to get the newspaper. In the recycling, put all the flyers right away. I don't even look at them. And I'm in turning the pages of the newspaper. My sister-in-law comes for coffee to the kitchen table. She said, "Where are the flyers?" I said, "They're right on top of the recycling, just out that back door there." And so she went out and got all that stuff, and she's looking at it. Oh, that's a good deal on a printer. And that's a good deal on a camera. And that's a good deal on flat screen TVs. And I thought, well, I didn't look for a flat screen TV until mine breaks. But they got so much of this crap and that they want the new one. And eventually, after they can't recycle it into the basement or cycle it through the garage, they rent a locker and store it. We're not wired that way.
Yeah, we don't have that same consumer driven appetite to just want to buy everything we possibly can.
Right. And so that changes the demand parameter somewhat from what we see nationally or internationally. But it's a good business. I'm for it.
Yeah, if you're up for it, maybe sometime in the fall we could pick a conversation up and even just talk more about self-storage, because I think that there's a lot of people that are curious about it and they just don't understand. Like you said, it's real estate, but there's still a business element to it that needs to be factored in. So if you're up for it, and we can
I expect in the fall not to have my second dose yet and to be sitting right here.
No, perfect. We could have another chat about it then.
Thank you very much, Chad.
Thanks for agreeing to come on this call, Sandy. I always love chatting with you and appreciate your insight.
Thank you.